We're going to turn now to private equity. KKR Asset Management, a firm we are watching closely, continuing to push into these alternative assets. And we are going to take you out to San Francisco right now because we have a special guest. Our own Cristina Alesci is standing by, and she right now is with the head of KKR's distressed assets area. Cristina.
Thank you, Deirdre. Well, thank you for being here, Bill.
Thank you, Cristina.
So you and your team have spent a lot of time analyzing the risk-weighted assets that many European banks may sell, and these are like loans and structured credit products. They're not actual businesses. Can you tell us a little bit about the size of the opportunity?
Sure, Cristina. We've done a lot of work looking at public statements from various European banks as well as through financial statement disclosures. And we estimate that European banks have an intent, either publicly or just generally, to sell about 1.8 trillion euro in assets over the course of the next 24 to 36 months.
Now, how does KKR Asset Management capitalize on that opportunity?
Well, there's a number of ways we capitalize, both directly and indirectly. When you're thinking about deleveraging a bank, that means that the credit availability is much less. So in addition to buying those assets, particularly at a large discount, just because of the supply-demand imbalance, you also have an opportunity to lend to those traditional banks' customers that can't get loans from those banks because effectively lending is drying up.
Right, so stepping in where banks are stopping.
That's exactly right. And so in mezzanine or direct lending businesses or in our special situation strategies where we're able to basically buy those assets or provide rescue financing to underlying companies,
right,
all present opportunities to take advantage of the European crisis.
Now, just on buying discounted assets, why haven't we seen more in the way of deals on that front? Because a lot of private equity firms, a lot of alternative asset managers are hunting for deals there, but we haven't seen that many happen.
There's been a few portfolios, and there's been more selective one-off asset sales than large, broad portfolios. And the reason being is that the way the bank has recorded those assets is really at par, less a allowance for loan loss. And so their net carrying value may be at 90 cents on the dollar today, when the real market value of that security is 60. And so you ask them, to buy the asset, and they say the price is 90, and you say it's worth 60, and until that spread, collapses, it'll be tough to transact.
So they don't want to take a write down, basically,
because
on these
assets. That would further impair their Tier 1 capital that they're trying to preserve as they sell down assets.
So this opportunity will play out over multiple years. It's not like next year we're going to see the market flooded with these assets, right?
I think in some cases, some of the banks are being much more aggressive now in the context of asset disposition. So you're starting to see a big step up in discussions of the banks and selling assets and taking a loss, because they either have to sell assets or raise somewhere in the range of 180 billion euros, $220 billion of new fresh equity. And we've seen Unicredit, as an example, do a rights offering, but that's very expensive.
Right. Now, okay, so shifting a little bit back to the U.S., many investors here are worried about, and abroad, are worried about U.S. bank disclosures over their exposure to Europe. Should they be concerned that the banks aren't being forthright about how much exposure they have to Europe?
We're big fans of transparency, and you think of the global financial system. We saw this in 2008 and 2009 as intertwined. So you can think of global banks as an offensive line now that we're in football season, and they're all lined up. And if one of them goes down, say a European bank, the implications are that the others now have a lot of additional pressure trying to defend the global economy, because the defense is the same size as it was before.
Right.
And losing a left tackle in the case of a European bank and having exposure to a JP Morgan or a Nomura in Japan has substantial ramifications in the global financial system and economic growth or lack thereof.
Right. Well, thank you so much for coming by. I hope we can do this again. I know that your offices are only a few blocks away from our studios here in San Francisco, so thank you so much.
Thank you, Cristina.
Thanks so much, Cristina Alesci, joining us there from San Francisco. You just heard her conversation there with the head of KKR's Asset Management, Bill Sonneborn.